This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, October 7th, 2015. Euro dollar. So not much going on with the euro right now, with the market confined to some consolidation, some choppy consolidation, and we need to see clearer directional insight with the break back below 110.87. That's recent support going back to that low that we saw back on the 3rd of September, or a break back above that May high at 114.67 for clearer insight. At this point, though, with the medium-term downtrend intact, a break below 10.87 is still favored for a move back towards the July low at 108.09. Sterling dollar. So cable has been under pressure in recent trade, with the market trading all the way back down, just shy of some key support going back to May at 50.90. A break below 50.90 would of course expose psychological barriers at 150 further down, but we are seeing signs of a potential short-term base over the past few sessions, and this could open the door for a bit of a correction up towards the 154 area. However, only a close back above 154 would take the pressure off the downside, and ultimately a break above 56.59 would be required to officially shift the structure. Dollar yen. So dollar yen hasn't done much and continues to be confined to some choppy consolidation, some tight consolidation over the past several days, and this range contraction does warn of an eventual breakout either to the top side or the downside in the sessions ahead. The market is kind of reaching an apex here, and although that the market could break in either direction, given the breakdown that we saw back in August, a lower top is favored at 121.74 ahead of the next downside extension back below that low that we saw at 116.12 from August. Euro Swiss. So not much going on with Euro Swiss over the past several days, with the market sort of comfortable, locked within a consolidation and consolidating above the 107 area. Overall, this market is in recovery mode, and so a fresh higher low is sought out ahead of the next upside extension beyond 110.50 and towards the 112 area further up. Ultimately, only back below 107.14 would compromise the recovery outlook for Euro Swiss. Aussie dollar. So an impressive recovery over the past several sessions for Aussie dollar, with the market stalling out recently by multi-year lows just shy of 69. At this point, though, the downtrend remains firmly intact, and a lower top is sought out somewhere below that recent low, lower top at 72.80 ahead of the next major downside extension and bearish continuation. Really, ultimately, though, a break back above 74.40 would be required to force a shift in the structure. Dollar CAD. So some nice setbacks in dollar CAD, some welcome setbacks in this market after trading up to fresh 11-year highs at just shy of 135. At this point, though, the setback should be supported into psychological area at 130, with only a break and close below 130 to really open the door for a potential shift in the structure. But ultimately, a break back below 128.60 would be required to really force a shift and give reason for concern or a threat of this bullish uptrend right now. Kiwi dollar. So Kiwi remains locked within a more well-defined medium-term downtrend, but the market has put in an impressive recovery over the past several sessions, with gains now pushing back above 65. At this point, though, there's some good resistance that comes into play into the 66 and 67 area, and really only a break back above 67.40 would be required to take the pressure off the downside. At this point, look for a lower top over the coming sessions, somewhere in the 66s, ahead of the next downside extension and bearish continuation back below 61.30, that spike low that we saw back in August, and into the 50s further down. SPX 500. So the S&P 500 has enjoyed a bit of a rally over the past several sessions, though these gains are now stalling out ahead of that psychological barrier at 2000 and well ahead of the lower top that's anticipated in the 2022 area. At this point, look for a bearish continuation back down towards those extreme lows that we saw in the 1830 area from August, while ultimately only a break and close back above this anticipated lower top at 2022 would compromise the newly adopted bearish outlook for the S&P 500. Gold. So gold looks like it's in the process of finally managing to mount a meaningful recovery out from those multi-year lows around 1073, and at this point look for a break and push back above 1170 to confirm a higher low at 1100 and open the door for fresh upside towards medium-term resistance at 1233. At this point, any setbacks should continue to be very well supported ahead of 1100, with only a close back below that level to compromise the recovery outlook for the gold market.